I'm Jivajyoti from Group 5 going to present about the background of the company. Transmile Group Berhad, an investment holding company involved in the provision of airfreight, aircraft, engineering and maintenance service, prides itself as being a company with stellar performance, operationally and financially as well as its share price. In 2007, however, the company was hit with an accounting scandal with allegation that its revenues and profits had been materially overstated as far back as year 2004. Transmile shareholding as at 28 April 2006 showed a mixture of local and foreign shareholders, with the largest shareholder being Trinity Coral Sdn Berhad with 19.5%, a company that was a part of diversified international conglomerate, the Quark Group. The Quark Group had earlier March in 2004 bought a 28.5% stake in Transmile via Trinity Coral Sdn Berhad from Gan and Qudi Muhammad for 282.5 million. In 28 April 2004, Transmile appointed Tun Dr. Ling Leong Sik as its independent and non-executive chairman, and the outgoing chairman, Chief Executive Director, Gan had been re-designated as Director and Chief Executive Officer of the company. It started when the company failing to adhere to the deadline in submitting its audited annual accounts for the financial year ended 31 December 2006 to Bursa Malaysia for public release. It was later found, amongst others, that the revenues and profits has been materially overstated not only in the company's 2016 unaudited annual accounts but also in the 2004 and 2005 audited annual accounts. Consequently, GAN CEO and former executives Qudi Muhammad and Lok Chok Ping were charged by the Securities Commission with aiding the company in providing misleading and unaudited consolidated reports for the fourth quarter of the financial year ended December 31, 2006, an offence under Section 86B of the SIA, read together with the Section 122C of the SIA. GAN and Qudi were also charged under Section 122B of the SIA in the alternative. However, Securities Commission later withdrew the charge against Law, the former Chief Financial Officer of Transmile, after he paid a compound of 700,000. Besides Securities Commission, Bursa Malaysia also reprimanded Transmile and four of its directors, Gan, Qudin, Chin and Shukri, for breaching the listing requirements pertaining to timely and accurate disclosures of financial information. Both Gan and Qudi were fined Rm 781,500 each, and Shin and Shukri were fined 162,600 each.
Next, the key issues in this case is firstly BOD, the Board of Directors, which is a corporate body made up of elected individuals who act on behalf of a company's stockholders. Number 2, the Audit Committee, which is one of the major operating committees of a company's Board of Directors, who in charge of overseeing financial reporting and transparency. Number 3, the external auditor. External auditors examine clients' accounting records and give their opinion on whether financial statements are presented fairly in accordance with the entity applicable accounting standards such as Generally Accepted Accounting Principle (GAAP) or International Financial Reporting Standards (IFRS). Number 4, the 2007 to 2009 financial crisis. The Transmile case occurred at a time when the 2007 to 2009 financial crisis that witnessed a number of high-profile firm collapse owing to ethical issues. Number 5, accounting scandal. Transmile Group was caught up in an Enron-style accounting scandal in 2007 when auditors found that the air freight service providers' profit for the years ending December 2005 and 2006 were drastically overstated. In 2006, Transmile lost 126.3 million instead of making a profit of 157.5 million, and instead of the 84.4 million profit recorded in 2005, it incurred losses totaling 369.6 million. As a result, in 2010, it was categorized as a Practice Note 17 company, and in 2011, Transmile was suspended as well as delisted from Bursa Malaysia.
There are some actions that might affect the relationship between the employee and the employer. As for this case, a low audit fee can be the main point because Deloitte and Touche has billed its client a relatively low audit price in this situation. However, from another perspective, it may be interpreted as a fear of losing the customer, especially given the fierce competition from other audit companies. Other than that, another factor to consider would have been the trustworthiness and auditor's independence. As mentioned in the case, Deloitte and Touche and Transmill Group had a long history going back more than a decade. This relationship may constitute a familiarity hazard to some extent. Familiarity may impair the auditor's independence and thought, and as a result, the auditing quality. Moreover, collaboration with outsiders participating in corporate operation or parties in charge of the company's money thus indicates information disclosure such as poor financial reporting quality, and this is the evidence in the case of Transmill Group Berhad. Not only that, lack of internal controls also can be the most biggest contributors to a fraud. However, the feeling of unsatisfactory can be a great tool to destroy a good relationship between the employee and the employer, and it leads to all of these problems that we have been mentioned. So we would like to offer some of the justification for the best course of action so that the interaction between all parties is practicing good ethics between corporation and consumer, since it may improve the company image and environment. Not only that, we would like to suggest to strengthen the control, because the lack of internal control can lead to so much negativity for the company. Last but not least, the company needs to take care of personal welfare and satisfaction, because this can give a great effect on the performance of the company and also can gain loyalty from the workers. As for this case, we think that Transmill Group Berhad needs to be more careful about the auditors' welfare and wages. It is all that they care about actually.
Let's continue to the significance of ethics and integrity to accounting profession. Ethics and integrity require accounting profession to comply with the laws and regulations that govern their jurisdiction and their bodies of work. Avoiding action that could negatively affect the reputation of the profession is the reasonable commitment that business partners and others should respect. Besides, in accounting profession, an important characteristic of the professional is to make trust and integrity the main of identity. As an important person in the fund management and playing a main role in improving business performance, every accountant needs to have the strong ethic. In addition, the role of the accounting profession has a huge impact on the business. Whether the economic climate is good or not, accounting profession are still needed to restore confidence in the global economy, help businesses identify and manage costs, and achieve sustainable growth. The professional code of conduct that the accountants need to comply. There are 5 fundamental principles in code of conduct for accounting profession. Firstly, integrity. Integrity is considered the honesty and truthfulness of one action. Accountant will perform with integrity means knowing, accepting, and deciding to abide by one's principle, which allow them to consist the honesty, equity, and decency. Objectivity. Objectivity is intended to provide a basis so that accounting information is not influenced by subjective elements that cannot be determined with certainty. The accountant with this ethic is capable of making decisions and judging without external influence. Profession, confidence, and UK. Accountant are persevering with responsibility to maintain professional knowledge and skill at the level required to ensure the clients or employees receive competent professional services. Confidentiality. The ethical duty of confidentiality refers back to the responsibility of person or organization to shield entrusted data. The accountant must keep confidential all information discovered and may not be used for its own benefit or benefit for third parties. Professional behavior. Professional behavior is a form of ethic in the workplace, so it usually associates with respectful and courteous behavior. The accountant should be aware of the way they deal with co-workers and clients, and ensuring the high quality place to work attitude allow them to enhance their productiveness and effectiveness inside the workplace. Finally, to conclude, this study also focuses on effort to look at the implements of the concept of ethics and integrity in accordance with the law to ensure a good and respected position of the profession, as well as reduce the problem, the white-collar crime in the organization. Thank you.